Welcome to SPKFeat trading channel. Study the past, know the future, each trade. Hi everyone, welcome to a new video for the channel. First of all, I would like to thank everyone that sent kind words by email, by Twitter, on Instagram and YouTube. Thank you very much for the feedback. You also handed some questions about the content of the videos. So I would like to do today a longer video with some explanations. I will not be revealing again everything that is my personal training because it's a very extensive material, but I can give you always a simple approach that you can then pick and explore by yourself. Remember that the way you study, the way you do your research is the basis for everything you will become. So it's very important to keep your journal, keep your notes, and do your back testing. Do it with passion, and it's very important to for you to grow, to be with a great mindset and always with focus on what's going to happen. So you really have to be mindful about what you did, your mistakes, your errors. It's very important to do the mistakes, do the errors, because that's the way you learn. You have to endure all of that, and keep your research on top and your backtesting on top, so you can have better results. So the thing is, and why I am telling you this, because the questions that you sent me were mostly about the calculator approach and the bias. Okay, so I will focus on those 2 points, and the video today will be a bit longer. Hope you enjoy it anyway, and take notes of everything I will say. I will hide some words. There will be some things that you will use for your future research if you listen carefully what I say. So let's start by the calculator and demystify a bit the question of the calculator. So I just use the calculator to work with a clear chart, with a clean chart, and I will show you how you don't need, you can use it, of course you can use it, but you don't need more than just the naked chart, calculator, and if you want a fib tool. The fib tool, it's a very important tool because it gives the prices and the ranges very quickly if you know what you do. So the formula for using the fib is very simple. So you just pick this number here, okay, you subtract this number here, and then you multiply by the level that you want. So I will do this very quickly. Okay, so let's do 11. I will do a different level than the previous video, and you will see exactly how it works. So we pick the first number, the fractal high 1. Okay, this is 1, this is 0, and this is 0.5, the middle. So we subtract this number here, and so far it's equal at the previous video, so it's 114.25, and now we multiply for the projection, for the extension we want. Okay, So let's see, today let's do the square root of the golden ratio. So let's do the 0.786. So you have this number, and then you have this number because we want the 1.786. We want this above. So we just pick this number and add this number, and the range will be defined. So it's plus and this is the number. Okay, so 11,730.55, and this will be around here. Okay, so you can do it by yourself and discover many things. The thing I want to let you know is that first, work with impulses. Okay, work with price impulses to understand projections and to understand extensions. The way I work with Fib, the Fibonacci tool, it's a bit different from how other people work. So I base my idea on fractal moves, both ways, and I work with in a way that I try to find the future extensions levels. Okay, so I don't work with fixed numbers like the golden ratio and its mirror. I don't work like that. I work with odd numbers, and it's very rewarding to study that. It takes a lot of time, it's a lot of backtesting, but you get the proper knowledge how price moves and how price expands over time. So let's start by doing, we now can put the calculator aside, and I will just use, for the purpose of the video, I will use the Fib, and I will show you how you can understand your bias just with these three levels, and how you can predict and understand direction in price. Okay, so let's start by doing this. If we have this impulse here, this last impulse here, if we double the impulse, let's say double the range, it can work like this. Okay, so if you do this, you already know where price will eventually go. So I'll just do this quickly for the sake of the video and for the sake of your patience too. But here you just see how interesting it is. Okay, so the reaction to this level, it's very interesting. But what you want to know is, okay, but how the hell do I trust this movement, the entire movement? Okay, so now we have a projection. So now let's see how price goes from here to here. Okay, so first impulse, and you see that price is, and let's create a rule here for our Fib reading and bias reading. If price is above equilibrium, okay, and it's normal to retrace, so that's the nature of price retraces to equilibrium. So if we have until price drops below here, or eventually, and I will introduce a new idea here, if price drops below the equilibrium of equilibrium, so let's do like this. If we do this, it's not perfect, don't mind the numbers, but mind the lines. Okay, So let's say this is aligned with this correctly, which you can do by editing the Fib tool, but let's do it by eye. Price can drop to here or can drop to here. If it drops below this line, then the bias is changed, unless it is an imbalance and like a liquidity. It takes the liquidity out of here and then goes up. Let's see how. Let's keep this one here. So just saying that this is the level 0.25, and if we do like this, it's the level 0.75. okay, so remember, we are just working with 1, 0 and equilibrium, same as here. Okay, so price goes up. It went below the equilibrium? No. So we just draw a line. Also, I will not be 100% perfect. I will try to do that. It's very difficult for me, but I try to do that. And now the continuation. Here is where things will start to get interesting. The continuation is that you find the next top fractal and you do the continuation. Okay, so let's do the same question again. Did it went below equilibrium or 0.25? It's a continuation. Okay, same thing here. Okay, let's do it the simple way. I don't do like that. My way of reading price is way more complex than this, but for the sake of the video again, I will sacrifice my methods for a simple one for you to understand. Okay, so it's the same thing, and you see how we have a target here, okay, a projection, and then at the same time we have the bias confirmed by the way the price retraces to equilibrium. Okay, for me price is perfect. Okay guys, understand this. For me price is perfect, and it creates imperfection, an imbalance, something like this, to move again. Okay, so we have this this range, and now let's see something interesting. So let's go to the 15-minute chart. Okay, and if you're here, we don't need that. So let's see how the last move of the day is important, and it's very important. So let's see. So it's above equilibrium, so we have the bias already in place. Okay, and for a projection we can do again something like this. Okay, I see what's happening, and even before we can project like this. Let's now use the calculator again, and I'll just go to a line chart like this, and pick the calculator again and add these numbers: 11,758. Okay, so it's this price, and we subtract this price. This helps me to keep the charts and the fib very simple. And now what we will do is that we multiply this by 2. Okay, and it's 169.24, and we had this on top of, and the price is 11,927.24. So let's pick a line and do that. So it missed my, and do the price. $27.24. Okay, so my sense of perfection is happy now. And as you see, it's interesting here already, but it's a line chart, so it's not a candlestick chart. And I would like to also see, and for the sake of what I know already, that we can draw a line with the same, using the same range, but multiplying by not 2, but for 1.5. It's like 126.93. Now we add this to the same number. And the price is 11,184.93. So let's do this line. Let's edit this one. This, we don't need this there, so let's do different. Okay, so we have this price. Now let's go to the candlestick again, and as you see, this is very interesting. So the previous day impulse above equilibrium, we are bullish, going long. Price went to a 1.5, okay, and then dropped, and then again it went up to the same level. So if this is a hard day for you, we can use the fib again, and you see how important it is. Again, the 75 level of this range, but it's the equilibrium of this range again. Okay, very important. Here you see that so we already covered Tuesday. This is Wednesday, the bias was in place, and now is Thursday, and we keep on going until we have this. Okay, see how price inbounds here. Now understand that price went down here because of this gap. Okay, this gap here. Alright, so this is the support, and this is this is like a consolidation type of day. Okay, so it turned out as a consolidation, but we already know that this is something that was projecting from down there, and we see the behavior of price. If you do something like this here, we can use 2 levels. Alright, you see that this is the equilibrium that is going to define everything. It's going to define everything. And you can also do this. Okay, and you see how perfect it is. So this is like a consolidation, and for Friday, that it's this day, this is Friday, this is a Friday short. It's going down, and we know it's going down because it didn't went above this equilibrium and went up. Okay, so we were controlling price here, and then this is a short. short, and then we go down. If you see what's here, let's take the calculator off, and if we see what's going on, you will understand that right now we can use fib again, and you see how you can have your bias in place. So it's again like this. Now let's use the red for going down. All right, we're going down, and as soon as you see where's the imbalance, you can just do this, and your bias will be, you will be more confident in your bias and how price keeps going. So using the equilibrium, it's like that. So we reach Monday, and Monday is, if you remember, it's the sell limit order video that I showed you. So it's the close and it's the open, and this is where price came, and we sell from here, and it's going down. Okay, so it keeps going down. We're watching the bias, and you can do like this and do like this. Okay, and we're already on Tuesday, so this is equilibrium, and all you have to do is keep on going. So do like this, do like this, sorry, like this, and here we are sure that it's not going up because it's, and here you have the confirmation, it's going down. Okay, this is a projection. We can do it with the calculator, but I'll do it with the rectangle, so you can see how price is responding here. Okay, so continue. Here you have another measuring, and you see how price goes here, just with equilibrium. Okay, and you have a target here, and this is it. This is what I wanted to show you. This is how you can work with equilibrium and have trust in your bias, and understand that you also have to count with spread to place your orders. The beauty of this, let's just do it correctly, so just like this and like this. So the idea is to use equilibrium to confirm your bias, use your risk management to control your emotions, and I'm just showing you a very, very simple way of doing it. Okay, hope you enjoyed, hope I have answered some of your questions or all of them, and see you in the next video. Thank you very much.